Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today, I'd just like to go over a bit of the charts and talk about, the rumors of the FOMC meeting and Jerome Powell speaking, that sort of thing. I really don't know what these other YouTubers are talking about. I think they must be smoking crack or something. I think it's been pretty trendy for some of these guys who don't really know anything to start talking about the markets and suddenly they just see Jerome Powell's name mentioned and they just start freaking out and starting rumors and stuff. So, just to make sure that you're getting your information from good sources, because to be honest, some of these guys are gonna, screw you over if they're talking about these things and they're not really sure what's going on. I still recommend to wait until the June data comes out. When we can see the consumer price index things with the different departments as well as the Fed meetings. So that's going to take some time. Whatever's going on this week, I think it's probably just related to Jerome Powell being sworn in for a second term or whatever his term is. Of course, he was first selected by Trump and then he was reconfirmed by Biden. And while Trump was pretty hard on him in the beginning because, of course, Jerome Powell was just not, lowering interest rates fast enough for Trump. He wasn't giving out free money fast enough for Trump. Trump wanted more and more and more free money in the system, and he wanted interest rates to be incredibly low. And at that time, Jerome Powell was resisting. We all demonize Jerome Powell, but you have to understand he was under a tremendous amount of pressure from his boss to do those things. And so eventually, Trump did get his way. He definitely almost twisted Jerome Powell's arm off, and the Fed just started printing unlimited money. Just continuously and just basically destroyed our system under the wise guidance of Trump there. And in his infinite wisdom, Biden kept him as the Federal Reserve chief. I don't really know how that works or how you get rid of one. I guess it's probably a lot of politics and quite a headache. And I think finding somebody to replace them probably is not that easy of a process. And there's probably no guarantee that they're actually going to be confirmed. So if you have a shaky economy, I mean, sometimes you play with the devil, But I guess one of the things that the Biden administration did require is that, Jerome Powell does focus on fighting inflation now and to turn around the policy of that infinite money printing. And so, contrary to the prior administration, we're now fighting inflation instead of printing infinite money. And of course, this is having a suppression effect on markets because, of course, if there's no infinite free money, then, people aren't just gambling it in the stock market and in crypto the way that they were during the Trump administration, especially during those initial injections in 2020 when people still had their savings intact. Of course, the markets have been stretched thin. The war with Russia in Ukraine and just a series of unfortunate events across the entire globe has put us in a very delicate position, right? So here we are, and the U.S. has decided that the battle that we're going to be doing is fighting inflation and, of course, supporting Ukraine in its effort to thwart and potentially ward off Russia. And that's going to do everything, like stopping uh, you know, fertilizers, stopping wheat, all these things from being exported, stopping energy from being exported from Russia as we try to choke off the neo Soviet Union, let's call them. It's not even Russia anymore under Putin. Of course, we are seeing the rise of the neo Soviet Union, and that's just a fact. He's trying to rebuild the Soviet Union. That's why he's taking over these countries like, Eastern Ukraine and then some of these other countries which he's been trying to take over for several decades, actually. And nobody has stopped him. Of course, some U.S. presidents have been friendlier than others. I remember, Bush, saying that he looked into his eyes and saw, like an honest man or something like that. So W, really believed in Putin. And I don't know, what was the relationship with Trump and Putin? Pretty chummy, right? I'm not really sure what the deal is with Republicans and the Soviet Union. It used to be the other way around, right, where we were worried about Democrats getting too close to the Soviets. But these days, I don't know, like. Every Republican except for John McCain, RIP, basically has been trying to get closer to the Soviet Union, and I'm not really sure what that's about. But my guess is it has to do with money, and of course, the amount of money that we're playing with in the system here is now trillions of dollars, and so all of this house of cards, all of this politics, all of this globalization, ever since the Cold War, when the U.S. really started to take over as the world's hegemonic power, all of this is starting to collapse down, and we're starting to feel the pressure of it on the American people. This probably was inevitable. You can't just have hyper globalization continuously. At some point, you do have to sync up everything. You can't just have hyper, technological increases without the people needing to, take a moment to breathe to catch up. And, with the rise of internet, with the rise of AI, with the rise of robotics, with the rise of crypto, everything is just going way too fast for especially the boomer generation. They just can't grapple with all of these things. Retraining is a huge issue. We've got all of our workforce spread out all over the world. And then what happens when you're in a conflict? What happens when you're sourcing from China and Russia? Because we've gone into this hyper globalization world, but at the same time, we have to, resist, these authoritarian, movements where, China may want to just completely take over the free and democratic country of Taiwan, where, the Soviet Union might want to just to take over the free and democratic country of Ukraine. And, do you lose your values in trading with these less than perfect and in some cases fairly evil parties where we can definitely say that Putin definitely has evil in his heart. He is not being a good man. He is basically a thug. He is a kleptocrat, which is in the same context as Saddam Hussein, where he will just have his enemies murdered and chopped up as he does with reporters. He will have them poisoned as he has done with political rivals. He will have them jailed as he has done with, anyone who runs against him for president. He is effectively president for life. And President Xi in China has seems to be following suit and has declared himself president for life. So let's see how this world goes. But we're getting our fertilizers from Russia. We're getting our energy from Russia. When I say we, I mean the West, right? And we are getting wheat and all of these things from Russia. And so if we need these metals for, our technological advancements, such as electric cars, etc., etc., you know, we have to understand who are we sourcing from. And I think this next globalization era is going to be one in which the world starts to understand, you know, that maybe hyperglobalization wasn't the best strategy. Maybe we need to, you know, do more on our own or with more reliable partners rather than just doing everything in China, doing everything in Russia. Because what happens when they decide to cut us off? Right? Of course, these authoritarians like Putin and President Xi, who is basically becoming Emperor Xi, and who is basically Tsar Putin, these kind of like thugs, right? Like these guys are basically insulated from any pain, and they can just push the pain onto their people. Whereas in the West and in democratic countries, of course, it gets spread out over the voting population, and how do we deal with this? How are our ideas going to change as the world evolves? And I think that the future of money is highly tied into that. So we're gonna see, are we gonna have a world where crypto is dominant? Are we gonna have a world where, the ruble really has a strong place, or is that about to get diminished? Is the Chinese digital yuan about to take over Asia, or can the US create a digital dollar that can compete? And how do we actually mitigate the problems that we have of all this debt and all of this kind of almost hyperinflation that we're experiencing in Europe and in parts of the West due to centuries of trying to dominate the world, quite literally, right? Quite literally. So, all of this is coming together, and we're seeing this in our generation. And a lot of people, in our own countries are working against us. They actually don't understand what's going on, or they're acting in self-interest, and they're not really thinking about what the next generation is going to deal with. But I think a lot of families are already feeling the pain, and the stock market is only a tiny, tiny, tiny reflection of that, right? Like, this is really the privileged society dealing with this, and no party, no government has its hands clean, but I think that we can all do a little bit better. Let's see, if we do take a look at the charts, we can see that we are getting um, this pattern that I kind of hypothesized, that we might have this kind of broken W, retag the bottom, and then potentially, if we find enough security there, we might have a bounce, but more likely we're going to come back down. So this is the NAS 100, and of course, if we do have this bounce on the NAS, then of course we probably will see that on Bitcoin and in crypto as well. But how high does this bounce get? I'm not really sure. I think that we've all been talking about the various, different gaps that are in the charts. So let's go ahead and see. We have a few gaps still here, which could get filled. And yep, well, we did play out what I was suggesting on the Russell, which is that, of course, we were waiting for the Russell to come back down and fill that lower gap. And now it looks like all the charts are in sync. The Russell has filled that gap, and so it just has the upper one, which, similar to some of these other charts like the S&P. And we're just playing in this range. It's the same thing for all of these indices as it is for Bitcoin, just kind of playing the range. And whether or not we get a pump, I'm still leaning towards the possibility of a pump. It does seem like volatility is slowly working its way back down. It does seem like the dollar is working its way back down. And so these things should continue to give a little bit of relief to the market. One of the things that's not helping is that these earning reports and the earnings projections by a lot of these companies are still really, really bad, right? And so you just see them losing support everywhere. Tesla is, 50% down off of its price. Who knows? Maybe it could go lower even. Twitter just being decimated here. Nvidia not doing great. Of course, Netflix couldn't even catch a bounce to fill up its gaps. I don't think it's going to be filling these gaps. Maybe during the next bull run. Yeah, I mean, look at this. MicroStrategy, that doesn't look very convincing. That's not a great rally or anything. So, we have all these stocks and all these indices, which pretty much they have gaps above, which could get filled on some type of relief rally, but they overall look very bearish and like they want to continue their way down. And so, if we do take a look at Bitcoin, it feels very much the same. We have a gap up here, which we've been talking about. A lot has been talked about it in the various by the various YouTubers. But again, like gaps, they can take months to get filled. They don't have to get filled right away. So I don't understand why people target gaps, you know, when the momentum is going against it. We could say that, it would be nice to fill that because we would get a little rally, but we shouldn't really expect that. It could also be one of these market maker ploys to push you down to leave a gap intentionally, sort of like they left a gap right here on the way up. And then everyone could get super bearish over here in November because they think, oh, maybe we're going to come down and fill that gap, right? Everyone might get super bullish thinking, oh, maybe we're going to pop up and fill this gap. But it could be just a market maker ploy, and then they just take a couple months in order to, take their time before they fill it. But, we'll see. Right now, they're just playing this range, which, if you're, liquidating people, I mean, it's been pretty good, right? Anytime you're over 30,000, people start getting super bullish, then you liquidate them. Anytime you get under 29,000, then people get super bearish, and then you liquidate them. So they've just been liquidating people on both sides of this fence. And we've also got kind of this wedge. It doesn't really look that great to me. It looks like we're kind of rounding over. I'm not sure if this is the right way to draw this wedge. There's like I mean, this is basically just been a really great trading channel, to be honest, if you just trade the highs and the lows, but there is a bit of a wedge pattern, and I just consider it, to be honest, just that bear flag. But we are getting at a point where you can see, like, at a certain point, markets do like to move. They don't like to just sit around forever in one area. And if we consider the amount of space, that might be, let's just find some kind of like typical area here. Maybe this circle, you see that? You see that? Yeah, pretty similar, pretty similar, pretty similar, pretty similar. This was a little bit wider, but we're pretty much in that circle, okay? Like that circle of width that likes to kind of break down or break up. We're pretty much occupying that much space. So in my mind, that suggests that a move is likely to be coming soon because, again, the market just doesn't like to sit around for that much time. And, you can go back as long as you'd like. And we do have these really boring eras, but if you kind of extend the chart, you'll see, oh, hey, yeah, look, that circle area, like you can pretty much draw it in everywhere. And then you can see there's like a pretty big move up or down after you fill in that much amount of time. And so, yeah, I would really expect within the next, week or so that, we're gonna see that move play out. And I'm still a little bit bullish on the, on the outlook of it. Today it's looking a bit weaker to me than the last time I made a video, but yeah, it's just I was trying to compare it to this time in January. It's not looking as good. It's not looking as good. So yeah. Like the momentum is just curving down much faster. We did have a flattening in January, but it kept it had a stronger thrust to it, right? And then the RSI, you know, it had its shakeout, but well, I guess the RSI is pretty similar. ADX, ADX still looks similar. Just I wish that we could have a little bit of positive indication there. We do have this coming down, so that's okay. We're not out of the bearish control zone yet. We haven't even really poked our head out. We did in January before we got like kind of a fake out to the downside. And so let's see, how about this one? This is also looking worse, to be honest. Still similar enough. It's just something's just looks pretty heavy. Pretty similar, pretty similar. Okay, yeah, so the analogy is still in play, where, again, I've marked it off in yellow here. Let's see if I can get a little bit of a brighter color there. Where we had this kind of consolidation area, and then maybe we had a fake out or something, and then a pop up, right? So that's what I'm really looking for because of the analogy of all the indicators. Looks very similar. We also had this kind of long wick, this long leading wick where we kind of bounced from there. Similar to this as well. This was an upward thrust, this was a downward thrust, but they both had the same kind of pattern play out where you had this consolidation area, slight directionality. This was down, this was up, this is flat. But then you have kind of a last dip, whatever your last dip is, and then a pop up, right? So is this our last dip and then we're going to have a pop up, or maybe we have a couple more of these just playing this range to before we have something like that? I still think this is possible. This was a nice 12%. This was a nice 20%. So 20% would get us to, approximately 35,000, and 10% would get us to about 32,000. So we're still looking for 32 to 35,000. And unless we get over 40,000, I really would not be bullish on this asset at all. I think we do have to take out 40,000 in order for Bitcoin to be bullish. If we lost that 28,000, then I'm going to be very bearish and think that maybe we could be playing out that move lower to 22 to 23,000 perhaps, which would be also, let's see, 20% down. Yeah, it would be 22 to 23. And 10% would be 26,000, 27,000, right? Something like that. Let's see here. Might as well check our alpha origin channels. Haven't taken a look at them so far. Wow, that's very cool. Look at how we've been consolidating on this. Sorry, just looking at some indicators there. But look at how we've just been marching up this diagonal. I mean, if you just ignore this like crazy wick and this kind of like a little flash wick right here, we've pretty much been just walking up this diagonal. And that's exactly what I drew out here. So again, like I'm just getting validated that these alpha origin channels are working. They're serving their purpose, and it looks good to me. Right now we're on this big kind of chunky dotted line here. I think I'll just turn it white. So whatever we're resting on, I'll just turn that one white. And let's go back in time and see in 2018 what we were doing. So in 2018, we were actually clinging to the underside of the one above it before we dropped down. So that's a bit different. Our current situation looks a little bit more like this. Looks a little bit more like this. Maybe like this. But there's not a perfect analogy in 2018. We can just move beyond that. Yep. Okay. So just moving along. I think that we are looking like, yeah, that's interesting. Also, this drop would bring us to, approximately 25,000 or that 22,000 on these alpha origin channels. So again, like we're within range. Where are my DCA areas? Yep, right there. Yep. 26, 23, and then maybe 18. And I have this 12 to 14, but considering just to raise that a bit. Yeah, 14. And of course, we had been looking at some of the fibs in order to understand these levels, and that would actually be 15,000. No, wait, was this the adjusted one? Yep, this is the adjusted one. Let's bring this back down. Oh yeah, that's 11,000. And then halfway up here is 14,000. Yeah, so just for really bottom of the range, in a normal economic situation, I would expect maybe 18,000 to 15,000. And if anything extreme beyond that, then perhaps we could be looking at those lower numbers, but no reason to entertain that right now. We should just wait for June to see what the Fed says, and then we can think about those potential next steps. Okay, guys, not going to take too long. Just going to wrap it up here. That was your alpha for the day, and stay safe and happy trading.